Good afternoon. This is Neil with Simple Futures, and it is Wednesday, Hump Day, heading into the famed triple witching options expiration Friday, end of quarter this Friday. And so today, CPI a little hotter than expected, Japanese CPI a little hotter than expected, UK GDP a little weaker than expected, and what do we get? Answer, nada. I mean, nothing. But listen, I'm going to start you off on this screen and explain to you what I've done here, then take you to another screen and show you why, okay? So what you're looking at here is the end-all, be-all, and point of control and ending point of which things go out today in the December contract. I'm December. I mean, there's no sense in being on September contract anymore. So this is a December quote. If you are looking at September, it's 50 lower, so just do the math on that. But it's 45.20. All roads lead to 45.20. I mean, that was daily pivot today. That's the point of control. That's the balance. Most traded price and volume I'm going to show you in how long in just a minute. But for like the last 10 days. So that's where we are, and that's you wonder, like, why is it so glued to this price? Well, that's the answer. Of course, I'm sure you're wondering, well, what's next, and what does it take, to move it away from this price? Well, CPI certainly was, an event today that could have been that catalyst and proved not to be. I mean, we got nothing, right? It went nowhere. So, PPI tomorrow, well, PPI to me honestly is less important than CPI, so PPI won't do it either. But what will have an opportunity to do it will be not the PPI, but the fact that tomorrow's Thursday, day in front of the triple witching Friday, which is, remember the AM settle SPX goes out first thing Friday morning. So that means any hedge that you've got against big SPX positions can come off Thursday, in front of a Friday AM SPX settle. So if volatility, and I would honestly anticipate the possibility of there being some volatility tomorrow, but it won't be on PPI. It'll be on that event, the release of the hedge in front of the OPEX, Friday. And remember, it's not like end of day Friday. It's first thing Friday morning on the AM settle SPXs. So, all right. So I said, here's why we're here and what you're looking at. And, well, by the way, what you're looking at is I started at, and you can see in the upper left-hand corner, I started at the 15th of June through the present. All right. So let's go to the chart now and look at the Y on that. So daily chart here now. Now, a couple of different ways you could do this, all right? Admittedly, we could start from about the 5th of September and go through this little sideways period right there. The answer is the same, by the way, if you do that. But here's what I kind of like to do too. If I see where are we right this minute, what was the last swing high and swing low? How far back do I have to go in order to include all of the prices that are within the swing high and swing low that precede the present, consolidation or squeeze? To me, it looked like this. It looked like, well, we were working our way up through the April, May, and then it sort of left that lower area distribution by poking its way up, coming back in right there, and then starting a brand new, lift off that starts this overlap, right? So what I did was I said, okay, remember, how far back do I have to go to include prices that are encapsulated by the recent swing high and swing low preceding the current consolidation? So, well, let's go left from the low and the high, left from the low, and figure out how far back do I have to go. Boom. Yeah, look at there. that's exactly the part the point at which I'm talking about. This thing started to break up, came back and tested before starting, to create this area, right? So admittedly, like I said, two different ways I could have done this. One, just this last 5 or some odd days or whatever right in here. I could have also gone back to about this period right here where it was consolidating, broke low, high, and then back in the middle. Could have done that. The answer is the same, though, strangely. When you profile that, you get the same point of control. And then, the way I like to do it, the recent swing high and low preceding the consolidation, go, where's that low? There. Go left. How far back do I have to go? Answer, about there. I chose the 15th of June in order to start that profile and came up with, again, the same answer. On a contract adjusted basis, I have to click when I do that profile. I specify the date range, and then I click within the settings tab. I select the adjust for contract change, right? And it gives me a value, area, high, low, and point of control for all of that area or date range, I guess, that I'm specifying that I wish for reasons that I have to analyze that date range. Then I get the answer. What does that profile look like? And the answer is you're sitting on it right here, point of control, 4520. It's the end all be all. All roads lead to until they don't. And if CPI didn't do it today, then PPI is not going to do it tomorrow. Like I said, if it's to release for its next, it would be a price discovery phase, which would be the next trending move and some breakaway type of a price discovery type of a price action. Then it's going to be the release of the end of quarter stuff, I guess, is the next likely or probable event that would have me to suspect it leads to that type of price action, which would be discovery. So what does that look like? Frankly, what I would honestly anticipate is that first we get a little maybe move higher, because you got to think. Then I start thinking in terms of, okay, what is this has to do in order to basically throw them, make it the most difficult, tricky, and throw the most people off. And, that's just what markets do, right? It's what it does. So what would that look like? Start up, find something right up here. It'd be about 45.55 in the December, which would put it at about 4,500 or 05 in the SPX. And then it then it just breaks. Then it starts to break lower, and I don't know that, of course, but that's what I kind of am looking for and suspect that's I look at, okay, here's where it is right now. What's the next event that can make for some price volatility, i.e. discovery, and then what different scenarios, can I come up with for price at that point? And one of which is that I look for is okay, what would be the most painful for the most traders, i.e. the most kind of, difficult or the trickiest. And that is a bid up first to get folks long, and then it just pukes and, rips your face off and that kind of thing. So that's where we're at. I honestly do kind of anticipate some volatility tomorrow on the fact that we're coming into the quarterly expiration, and with that, the opportunity for the release of the hedge against the big SPX positions, and the ES futures are usually that. I feel like if the trade of choice has been long of late, then the dealers are on the other side of that, short the calls that you're buying the SPX, and so the hedge against that is long ES. And so how do you release that hedge? Well, you sell them. And what does that do? It knocks price down. And so that's where I come up with that idea. So whichever way it goes, we shall find out together. And let's move on with that. So I'll let you be and check you again at the next update. Good night.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me.